In the world of corporate finance, ethical considerations and corporate governance have emerged as critical pillars of sustainable business practices. This documentary is a comprehensive guide to responsible business conduct and the challenges companies face in maintaining ethical standards. We will explore how ethical considerations are strategic necessities in today's complex business environment. Principles of good corporate governance. At its core, corporate governance refers to the system of rules, practices, and processes by which a company is directed and controlled. It essentially provides the structure through which corporations set and pursue their objectives, while reflecting the context of the social, regulatory, and market environment. Good corporate governance is not just about adhering to regulations. It's about fostering a culture of integrity, transparency, and accountability. One of the foundational elements of effective corporate governance is the establishment of clear principles. These principles serve as a moral compass, guiding decision-making at all levels of the organization. They typically encompass areas such as fairness, transparency, accountability, and responsibility. By adhering to these principles, companies can build trust with stakeholders, mitigate risks, and create long-term value. Managing conflicts of interest. However, implementing these principles is not without its challenges. One of the most significant hurdles companies face is managing conflicts of interest. These conflicts can arise in various scenarios, from board members having financial interests in company decisions to executives receiving compensation packages that may incentivize short-term gains over long-term stability. To address these issues, companies must establish robust policies and procedures. This might include mandatory disclosure of potential conflicts, recusal from decision-making processes when conflicts exist, and regular audits to ensure compliance. Corporate social responsibility and finance. Another crucial aspect of ethical corporate governance is the integration of corporate social responsibility, CSR, into financial decision-making. CSR goes beyond mere philanthropy. It's about how a company manages its economic, social, and environmental impacts, as well as its relationships with stakeholders. This holistic approach to business recognizes that a company's long-term success is intrinsically linked to the well-being of the communities it serves and the environment in which it operates. Incorporating CSR into financial strategies can take many forms. It might involve investing in renewable energy to reduce environmental impact, implementing fair labor practices throughout the supply chain, or developing products that address societal needs. While these initiatives may sometimes conflict with short-term profit maximization, they often lead to enhanced reputation, increased customer loyalty, and improved long-term financial performance. The role of whistleblowers. The role of whistleblowers in maintaining ethical corporate conduct cannot be overstated. Whistleblowers play a crucial part in exposing wrongdoing and holding corporations accountable. However, the decision to blow the whistle is often fraught with personal and professional risks. As such, companies must create an environment where employees feel safe to report concerns without fear of retaliation. This involves establishing clear reporting channels, protecting the anonymity of whistleblowers, and fostering a culture where raising concerns is seen as a valuable contribution to the company's integrity. Trends in corporate governance reforms. Corporate governance reforms are on the rise due to scandals, increased scrutiny, and public demand for accountability. Board diversity, including a variety of perspectives and expertise, is key for robust decision-making. Increased focus on cybersecurity governance due to digital dependency. Boards expected to understand risks and oversee strategies, including regular briefings, system testing, and incident response plans. ESG considerations have become vital in corporate governance. Investors, regulators, and the public demand that companies focus on environmental sustainability, social responsibility, and good governance. Environmental, social, and governance reporting frameworks and metrics are integrated into executive compensation plans. Global challenges in corporate governance. The globalization of business has added another layer of complexity to corporate governance. Companies operating across multiple jurisdictions must navigate a complex web of sometimes conflicting regulations and cultural norms. This requires a governance structure that is both robust and flexible, capable of adapting to local requirements while maintaining a consistent ethical framework across the organization. Technology and corporate governance. Technology is also playing an increasingly important role in corporate governance. From blockchain-based voting systems for shareholders to AI-powered compliance monitoring tools, technology is revolutionizing how companies implement and manage their governance structures. However, this also raises new ethical questions, particularly around data privacy and the potential for algorithmic bias. Persistent challenges. Despite these advances, challenges remain. One of the most persistent issues is the potential misalignment between short-term financial incentives and long-term value creation. Executive compensation packages that heavily emphasize short-term stock performance can lead to decision-making that prioritizes quarterly results over sustainable growth. Addressing this requires a fundamental rethink of how we measure and reward corporate performance. Another ongoing challenge is the balance between regulation and innovation. While robust regulations are necessary to prevent corporate malfeasance, overly burdensome rules can stifle innovation and competitiveness. Finding the right balance requires ongoing dialogue between corporations, regulators, and other stakeholders. Ethical considerations in the wake of COVID. The pandemic has brought new ethical considerations to the fore. Companies have had to grapple with issues such as employee safety, supply chain resilience, and the responsible use of government support. These challenges have underscored the importance of having strong ethical frameworks and governance structures in place to guide decision-making in times of crisis. Future trends in corporate governance. Looking ahead, the future of corporate governance is likely to be shaped by several key trends. Climate change and environmental sustainability will undoubtedly play a central role. Companies will need to demonstrate not just their commitment to reducing their environmental impact, but also their ability to adapt to the physical and transitional risks posed by climate change. The rise of stakeholder capitalism is another trend that's likely to influence corporate governance in the coming years. This approach recognizes that a company's responsibilities extend beyond just its shareholders to include employees, customers, suppliers, and the broader community. This shift requires a more holistic approach to governance, one that balances the needs and interests of all stakeholders. Artificial intelligence and big data analytics are set to transform corporate governance. These technologies offer the potential for more sophisticated risk management, improved decision-making, and enhanced transparency. However, they also raise new ethical questions around data privacy, algorithmic bias, and the potential for technology to concentrate power in the hands of a few. In conclusion, ethical considerations and corporate governance are not just compliance issues. They are fundamental to a company's long-term success and sustainability. As the business landscape continues to evolve, companies that prioritize ethical behavior and robust governance will be better positioned to navigate challenges, seize opportunities, and create lasting value for all stakeholders. The journey towards better corporate governance is ongoing, requiring constant vigilance, adaptation, and an unwavering commitment to doing what's right, not just what's profitable in the short term.